right? Hey man, I had this tax deduction write-off thing. What is it? And what can I write off? And I'm like, and I've answered this question 17 million times at this point. So I'm like, all right, here we go. I need to create a resource where I can educate people on what it is and give them a list of things that they can pick from. So I spent a month creating this ebook, and I basically spent the first quarter of the book explaining what a tax deduction is, what a write-off is, and how to do it. And then the latter half is literally a list of 200 tax deductions that anybody with a business or a side hustle can implement into their business today. So it's an A to Z list of over 200 tax deductions. So if you ever got that question, hey man, can I write off my computer? It's a section that says computer, and then it's an explanation of how to write off a computer. Like, hey, can I write off a car? It's an automobile section of how to write off automobiles in both ways. So I'm not only giving you a list, under each item, I'm giving you the definition and explanation how to do it.
Breakdown. I like that, man. Yeah. What's driving you, man?
I mean, do the mentorship of the people I hang around, right? So I just dropped $35,000 on a mentorship program, and I've never been around people more motivated and that have more ideas than this group of people I'm in. And when you're in rooms like that, it's going to make you a better person. It's going to make you a better entrepreneur. And the reason, so what my mentor says to me is, don't create a product, then try to sell it to the people. Have them tell you what they want, and then go create it. So what most people do, and most people fail with their courses, with their ebooks, or with their content, don't guess what your consumer wants and then try to provide it to them. Ask them, what do you want from me? They will gladly tell you, and then you go create it, and then you give them what they ask for. They'll gladly buy, and they'll gladly share. So I think as entrepreneurs, that we have to get out of our own way and just ask directly what people want, and they'll tell you,
And to that point, I think you've got some concrete examples. I think some people will struggle with the intangible, but you also talk about some other things that are tax deductible. I don't think people talk about. And honestly, I'm gonna have to get offline with you about this business coach one, because I got two. But you talk about mentors, business coach. Can you kind of break this down? So you say, for the people at home, here are the best ways to invest in yourself. These are also tax deductible: mentors, business coach, online courses, books, and conferences. Can you walk through that a little bit? Because I think that'll be surprising to some folks.
Yeah, and I'm probably going to irritate some people when I say this. So here's what it was for me. Like, we're taught to go to college, right? We're told to go to college to get a degree, and we should. I did. I got my master's degree in 5 years. My college education was $150,000. Thank God it was all paid for me. But college costs are not tax deductible. Like, yes, you can deduct your student loan interest, and yes, you might get a small deduction for tuition if your parents don't make any money, basically. But we're taught to get an education, and they won't give us a tax deduction for it. And we have to learn from people who haven't done what we want to do in the first place, right? So, and that's the point I might irritate some people. But you mean to tell me that I can go to a Tony Robbins event, who's a multi-billionaire, and learn business strategies directly from a billionaire who I want to be, and the IRS will allow me to deduct that on my taxes, because the IRS code says if you pay for education that helps either you expand your industry knowledge or expand your business knowledge, those expenses are 100% tax deductible. So in that regard, business coaches are 100% tax deductible. Mentors are 100% tax deductible. Conferences, Tony Robbins has a business mastery event. It's like $5 or $10K or whatever, but you can go learn from Tony Robbins and get a $5,000 to $10,000 tax deduction for learning, which is going to make you more money in the future. So that mentorship that I just paid $35K for, number one, Marcus, yes, I'm getting a $35,000 tax deduction for joining that mentorship. Second, and probably more importantly, I'm going to make more money, because the most valuable investment you can ever make is that investment in yourself. So I want to encourage people who aren't doing that yet to start. And it don't got to be $35K. It can be $35. Just pay to get in the room. And I'll give you some advice. The more expensive the room is, the more valuable it tends to be, and the more valuable people that tend to be in that room. So that is what I learned in my journey so far, and I'm looking forward to continuing to invest.
And I mean, I can speak to that and reemphasize that point because I think some people are going to hear 10,000, 35,000. Some people hear $35. Like it's all crazy. Like, you know what I'm saying? Like I'm check to check. What the hell are these boys talking about right now?
Right.
And I agree with you because what happened in my case, and I believe you'll be able to co-sign, is there are other people in that room who also spent $10,000. And so I tapped into this network and it was like, I want to say 300 people when it was all said and done. And like, I didn't even really know. I had a pretty good idea what I was going to get going out of that. But as far as that return on investment, that 150,000 that I talked about, that came out of that network. So it was a 6-month mastermind. And then I also learned how to build courses out of it. And I still stay in touch with a lot of those individuals. Many of them will be circling through this show. And it's hard to explain that to people who haven't done it for the first time because they're going to, and it's actually something that mentor / my brother-in-law told me is, you know, I'm already rich. You're not. So like your I think you said your brother, like he hasn't worked in a 9-to-5. Like he still thinks it's crazy. Like the pandemic was just another day to him. It was a Tuesday to him. So
he made more money in the pandemic. It's crazy, but go ahead.
I'm over here complaining about work. He's like, people still do that, man. That's wild. You know. And so like when you talk to people who have like been entrepreneurs their whole life, they think it's just as insane that people are still waking up at 6 a.m. talking about, are you a morning person? No, I'm not a morning person. I need some coffee to wake up. Like you're like, people still having these conversations. I thought we solved that in the 70s. You know, didn't the MacBook fix that? And like, so I strongly encourage people, like you said, find whatever your price point is. I mean, I've seen the difference even in $10 because we're all part of these Facebook groups. Mm-hmm. I see the exact same question. I'm in some of them, you know, I'm free. And there people, because there's always new users coming in, and they ask the first question that was ever in the Facebook group. They're like, hey, guys, and that's cool. Hey, whatever. They're new to the group. They're like, hey, I'm building a course for the first time. I'm like, this is a Google question. This is a Google question. And what I found in those paid platforms is those questions have been already weeded out. Like you're surrounded by people who have already answered, hey guys, I want to start a website. They're not asking, hey guys, I want to start a website. They're like, hey guys, I want to make a $10,000 website this month. Like, yeah. And then you can follow that conversation because, you know, I would like 10,000 in my bank. So let me see what this thread is talking about and see who these people are engaging. Let me follow them on Instagram because that's what I do because I get my stock on. Mm-hmm. And so I encourage people to find that level up. And you've given some more examples that I want to share here with the people. As far as now we're kind of on the tax deductible side. So we already hit on the, this was as far as the mentors and coaches, but the why. So can you kind of walk through, so the people who can't see this at home, it's the generational wealth play. Mm-hmm. And I actually had a question for you. I think some people are going to get caught up at start a business. Do they need to start a business, an LLC, I'll say, to be simple? Or are there some moves that they can be doing here for as far as they transition to entrepreneurship that doesn't necessarily require that legal business? And then what is the benefit of going the business route?
Yeah. Okay. So for this strategy specifically, so for those of you all that can't see the tweet, it's a generational wealth play. It's a way to pay your kids and have them kids receive that money from you tax-free, and then have your kids then go and invest that money tax-free, right? And what the tweet says is basically, if you do this with your kids as 8 years old, by the time they're 22, your kids will have accumulated a little less than $500,000 in tax-free money. Therefore, you don't have to pay their bills anymore, right? So the premise behind this tweet is, for this example, you need to have a business, right? Because this example, I'm telling people, hey, if you have a business, you're allowed to pay your children from your business. If your children are doing actual work in your business. And what I mean by actual work, they could be shredding paper, they could be handling your social media, they can be answering phones, they could be cleaning the office, whatever. As long as your kids are doing legitimate work, you can pay your kids up to $12,500 each child. And then that money goes to them tax-free, and you, the business owner, get a tax deduction for that as well, right? So it's a twin benefit. You get a tax deduction and your kids get the money. Here's the thing that people get hung up on, like, well, I don't want to give my kids that money. You don't have to actually let the kids spend the money. Put it into their account and you do whatever you want with it. You can pay their tuition with it. You can take them to Disney World. My only point of this is stop giving kids or paying for things for your children with after-tax money when you can pay it with pre-tax money. And then the last point of it is, if you put $6,000 of that in a Roth IRA, and the reason why you have to have a business is because your kids have to have earn income to contribute to Roth IRA. So therefore, if you're the employer that's employing them, they have earned income, they're able to put $6,000 a year into a Roth. And I think we did this at like a 13% interest rate, like something, whatever Vanguard's total index was returning. We put that in there. So they did it from 8 to 22, they have about 400K. And I was what the point of this tweet was, to get people's mind wrapped around, like, let's set our kids up for the future instead of like putting, phone bills in our kids' name and messing up their credit, like, which is mostly what our people tend to do.
And another thing, when people get to this point, and I couldn't even say when I got to this point, I know my mindset changed some years ago. And some of that is because of the financial position that I've put myself into, honestly, through the 9 to 5. But I hire where I'm weak. If y'all think I know anything about LLCs and established business, y'all got me bent to all types of sides. Always, like, I hired a lawyer. Like, and so people are like, I don't know what to do. And I'll give you an example. My cousin now, to this day, I don't know how he did it. I want to say LegalZoom, but my cousin reached out to me via text, like in the morning. He's like, yo, Marcus, I see you doing your thing, man. I want to start a business. I was like, well, I have a lawyer. Obviously, she's going to cost a little bit more because we have a one-on-one relationship. But I know before we went through LegalZoom. That afternoon, he was like, yo, cuz, I got my LLC. Like, I was like, that's what's up. So like, don't let the fear of what you don't know stop you from moving in what I think we're saying is a good direction. It's not the only direction. I'm not even gonna call it the right direction. It's just another direction, but don't let the fear of the unknown stop you in doing so. I want to hit another why tweet. So for those of you on the podcast, I'll read this one. I know I didn't read the last one, but hey, you could have been here watching the video live. If you save $400 a month for 30 years, you'll have $144,000. I've seen different mixtures of this. And for people who want to try this at home, you can go to investor.gov. They have a great compound interest calculator. You can type in your non-savings account. I have a quote. I'm holding up my quote fingers. High yield savings account. I think it's like 0.999. It might be 0.09 at this point. I don't even look at it no more. However, if you invest $400 a month for 30 years, you'll have 1.1 million. Less than 1, you can't save your way to wealth. Less than 2, if you use a Roth IRA, this is $1.1 million tax-free. Do you have any thoughts or anything you want to expand on that tweet?
Yeah, man, this is just like a generational curse I'm trying to lift, man. Like, at least for me, right? I was born in a household that said, if you're going to save your money, put it under a couch, put it under the mattress, put it in the shoebox. Don't trust these banks, whatever. Don't invest. You can't trust the people with your money, right? That was what I was, raised under. And it wasn't any of my family trying to be like, negligent or disruptive to my future. They just didn't know any better, right? So I want to debunk the myth of, I want to teach people the importance, not even the importance, the mandatoriness of investing, right? The mandatoriness of investing. So I found these numbers, I researched these numbers, and I was like, yo, these numbers are going to catch eyes. Like, okay, one scenario I had 150K, another scenario I had 1.1 million. What is the difference? Like, we did the same thing. What is this $900,000 difference? And that difference is compound interest. And people are like, what is compound interest? I say, come on, son, sit down. Let me teach you a lesson, right? Because this is what Wall Street and Warren Buffett, at least, I'm a fan of, is trying to teach us, like, yo, investing is not an option, it's a must, right? So you could be doing, two people could have the same amount of money, but one person invests it, one person saves it, and the other one is financially free and the other person isn't. And just because the only difference is one person had a little bit more information than the other person. So I'm trying to lift the curse that I was brought up with an eye-catching tweet like that. And that one, it blows up every time. Like I post it maybe once a quarter, and it hits I get so many hundreds of questions, and then I send them to like a little resource to like learn more about investing. But the point is just, you can't save your way to wealth. You got to invest, period.